All right, good to be back, guys. It's the part-time trader. This week, we're going to be taking a closer look at Bitcoin, and I'll be explaining for some of my new followers why I am so bearish on the world's leading cryptocurrency asset and why I believe the volatility that we've seen over the last few weeks is going to look like child's play in the rearview mirror. I genuinely believe that Bitcoin is heading to levels that very, very few people are capable of imagining. And if you want to find out why, then please do stay tuned. Right, before we get into the charts, just a standard weekly reminder that none of this is financial advice. If that's what you're looking for, you're in the wrong place. These videos are for entertainment purposes only and an opportunity for me to share my views on how I see the market at the moment. So please do not make financial or investment decisions off the back of what you hear on any of these videos. But if you do find any of the content useful, entertaining, informative, then please do hit the subscribe and the like button and help me grow the channel. I would massively appreciate your support. Right, so I am probably the biggest bear in the crypto space at the moment, and I have been for some time. And one of my tweets went viral, and this particular chart I'll come to in a bit, but this particular chart that I've posted a few times shows BTC going as low as about $3,000 to $4,000 in 2027. And this tweet has gone viral for me a few times. Last week it got retweeted by a few huge accounts who ended up driving lots of hate towards my feed on X, but also inadvertently gave me quite a lot of exposure that brought new people to some of my work. So I thought I'd use today and this video as an opportunity to explain how I arrive at the price projections that I have been sort of promoting, pushing on X recently. And what I wanted to do is just go right back to very basics and look at where are we in the kind of macro Bitcoin cycle. And when I say cycle, I don't mean where are we in the sort of 4-year cycle that lots of people point to. I mean in the overall grand scheme of things, this asset has been around for 15 years now. Where are we in its growth curve and its kind of growth trajectory? And I wanted to start with this chart here because this is look, this chart is really popular on X. Lots of people post this, and I have to say, although I posted it myself a few times, I'm not massively wedded to this chart as a great predictor of price action. And the reason being that you can pretty much flex some of these curves any way that you want. So if you wanted a bit more upside here, you could pull this sort of this log curve line higher. You could fiddle with it so that it fits perfectly to the recent top. But the general point that I take from this chart is that this sloping of this upper log curve trend line tells us something really important about the Bitcoin growth cycle and where we are. And lots of people, I think, have got so wedded to the idea that for many, many years, Bitcoin has gone up unbelievably. I mean, we are talking probably the fastest growing asset in the history of the world, from mere pennies back in the year 2009, 2010, through to over $100,000 where we currently stand. But along that trend, something really important is happening, and very few people want to talk about this. And that trend is that from each halving to the next cycle top, we are seeing diminishing returns. So back in the first halving, which took place in 2012, if you were to buy Bitcoin at the point of the halving in 2012 and you were smart enough to dump at the high of that cycle, you would have made 100x. Fast forward to the halving of 2016, and if you were to buy there and sell at the cycle top, you would have made 26x. You can see where I'm going with this, guys. Fast forward to 2020, halving to cycle top, you are talking about 6x. So what has happened is you've gone from an asset that is generating 100x returns for investors from halving to cycle top to 26x to 6x. And what has happened recently is that from this halving back in 2024 to where we are now, we have not even delivered a 100% returns for Bitcoin investors. And this is really, really important because I've spoken many times about the fact that Bitcoin is producing diminishing returns. And look, this is natural, right? I mean, when you look at the market cap of this asset way back here, it was next to nothing, and it was hard to access. You couldn't buy on established regulated exchanges like Coinbase. You had to send your money to some dodgy place in Lithuania and ultimately pray that it hits your crypto account so that you can purchase Bitcoin, and then pray that that exchange didn't go under in the way that Mt. Gox did many years later. And lots of people who invested back here have been rewarded richly for taking a huge risk on this asset. But as the market cap grows and the market matures, of course what's going to happen is that the returns are going to diminish over time. Everybody knows about Bitcoin now. There's not a single person on the planet that hasn't heard of Bitcoin. And many people have been actively investing in Bitcoin and alts in recent years, probably peaking in the 2021 bull market, where we just saw an absolute frenzy. I was first in the crypto space in 2017, having ignored it for a few years, and this felt like a really pivotal moment for crypto. But I would still say that the numbers of people who were buying and holding crypto around here was still relatively small compared to what we saw in 2021. So what you've got is the market is maturing. You're starting to reach some sort of saturation point in terms of the number of people who are aware of Bitcoin, who are actively purchasing it. And inevitably, because of all of those factors, the asset is maturing, it's producing diminishing returns. You're not going to be able to sustain 100, 25, 6x moves from halving to cycle high every single time we get into what is called the 4-year cycle. And you can debate whether or not the 4-year cycle still exists, but the fact is that historically halvings have led to big price increases, and right now we're not seeing that. You know, you go back in time, you look at any halving to cycle top, you are producing big gains. And here we are, we're a year and a half on from the last cycle, the last halving, in April 2024, and price is less than 2x above where it was then. So less than 100% returns for investors. So when I talk about being bearish on BTC, you have to understand that even if you don't buy into the idea that this could go much lower, and I'm talking about as low as $3,000 to $4,000, and I will come back to why I believe that's possible in a minute. But it's really hard to deny, even if you are not as bearish as me, it's really hard to deny that something is changing, that the market is maturing, and that investors are being exposed to much less upside every time they purchase Bitcoin relative to the early days of the market. And I think so many people are just wedded to the idea that Bitcoin will continue to produce these massive parabolic gains, parabolic returns to investors every few years, and I just cannot see that. And I think the evidence is in my favor here. But there are other reasons why, for me, now is the time to be cautious on Bitcoin and to be realistic about the types of returns that investors can expect over the coming period. So before we even get onto how low this could potentially go if we see a major correction, I guess it's important to take a look at some of the context that the charts are pointing to when we think about Bitcoin price action. So this is Bitcoin versus gold, XAU. And I've posted this chart a few times over on X. The reason being, we've had this really clear uptrend for over a decade now that has been pivotal to price action. First acting as support all the way up from 2012 to 2013 to 2022. So 9 years of price being supported every time it came into this sort of trend line. And this uptrend held the price of Bitcoin versus gold in such a way that every time it hit, if you were to make a purchase of Bitcoin, you were going to outperform gold and produce significant returns. But look at what has happened since 2021. So we made these highs when the market peaked out in 2021. And since then, Bitcoin has failed to make a new high versus gold. Now, as we all know, gold has produced incredible returns for investors over the last year. And one of the consequences of that is that Bitcoin has suffered as a result. Now, I think people have always thought of Bitcoin as a sort of hedge to inflation, but it's interesting that Bitcoin is trailing the kind of the kind of returns that investors are seeing when they invest in gold at the moment. And from a technical perspective, the primary reason for that is that this uptrend, which has lasted a decade, has now been backtested as resistance, and these highs have failed. We've failed to breach these highs in recent months. And if you look back as far as December last year, so almost a year, we've come into this region twice, and we've been rejected both times, with a swing failure here back at the end of 24, beginning of 25. So when I talk about zooming out and taking a look at the bigger context in which we're operating in, and what the bigger higher time frame trends tell us about Bitcoin, my starting point is that the days of parabolic returns are gone, at least for now. Now, I'm not saying that at some point in the future, in fact, post big correction from 27 onwards, I am extremely bullish on Bitcoin. I think longer term, this thing has all the potential to go to $500,000, potentially even $1 million. And you might say, well, that's fantastic, it's at 100,000 today. But I think in the short term, we could see a really dramatic drawdown, which will give me a much better entry over the next couple of years. And all of these charts, whether it is this kind of slowing logarithmic growth trend, or the loss of this uptrend versus gold, and the loss of momentum that we've seen versus gold over a 5-year period, all of these charts are telling me that something has shifted. Now, I am expecting further downside for BTC versus gold in the short term, and I think over the next couple of years it could go much, much lower versus XAU. So we can debate how bearish Bitcoin is at the moment, and we can debate how low it might go if we see the type of correction that Bitcoin has historically suffered, particularly in the year after a halving. We tend to see in Q4 of the post-halving year, we tend to see the market top out and Bitcoin goes through a sort of cyclical adjustment, and often that adjustment will be, in the region of about 80%, historically speaking. But we can have a debate about whether Bitcoin is going to go down more or less than that. But what I think is hard to debate at the moment is the idea that Bitcoin is flattening out even versus the US dollar and versus gold. And I think that points to quite a significant shift in the trend that we see here. And if I just chuck one more chart up, this is Bitcoin versus the NASDAQ. And I think this makes my point just as well as the gold chart, in that 5 years ago, 5 years ago in March 2021, the crypto market peaks versus the NASDAQ. Look at some of this performance. So the NASDAQ was going up during this time, so Bitcoin was going up even more. We saw this big crescendo in the sort of $60,000-$70,000 region. And since then, Bitcoin has really struggled to build momentum and make a new high versus the NASDAQ. And it did that very, very briefly this year. So from April through to August, price was holding above the previous high. And you can see this area here acted as resistance, and then we flipped it to support. But what's happened over the last couple of months is that we've lost this major uptrend versus the NASDAQ, which has been in place since the 2023 bottom for crypto. And we're also back under this key resistance and support level, which at first was resistance and then resistance again, flipped to support. Now this starts to look like a deviation where price gets above the highs but comes back down, and we start to get weekly closes back beneath this key level. And from a technical perspective, this is one of the patterns I look for when I'm thinking about weakness in markets and trying to find signs that an asset is struggling for momentum. The fact that we have taken 5 years to breach this high, and then when we did it, we could only sustain that high for a few months before falling back underneath, is not a good sign from a technical perspective. And some of you who have followed me on X or followed me on here on YouTube for a little while know that I am expecting the NASDAQ to appreciate quite significantly over the coming months. And I believe that we are heading into some sort of blow off top on tech stocks and in the AI market particularly. But to me, all the signs that Bitcoin are going to underperform the NASDAQ and underperform gold are still here. And so I know lots of people think that a bullish NASDAQ is bullish for Bitcoin, but you've just got to be careful that it's not necessarily the case that NASDAQ is still acting like it's a sort of levered NASDAQ product. You know, in the past, if you were bullish on the NASDAQ, Bitcoin was a way to produce superior gains. But recently, that trend has started to shift, and I think we are going to see Bitcoin versus the NASDAQ go much, much lower. What does that all mean for price in USD? Well, this is the chart that I went viral for last week. I've had something like 600,000 impressions on this post and gained a ton of new followers. So I'm really grateful, despite the fact that some of those big accounts were mocking me. I'm really grateful for the exposure they've given me. And I know lots of people find this really hard to get their head around, hard to come to terms with the fact that somebody believes Bitcoin is going to go as low as $3,500. But look, if you go back and you look at some of my previous videos, I believe that we are in the end times for markets. I think we are on the brink of a correction in traditional assets that is going to make the 2008 great financial crisis look like child's play, and potentially, you know, gives us the kind of decimating price action that we saw 100 years ago when we had a Great Depression. Now, I know lots of people say that and bears get mocked. I should clarify that in the short term, I'm really bullish on the NASDAQ, and I've posted some of these charts over on X, so head over there through @part-time charts if you haven't seen them. But when the next phase of the market is done, I believe there is so much debt in the system, and with rates holding higher, stubbornly so, I believe that we are entering a new period in markets where governments are not just going to be able to print their way out of trouble, where rates holding higher is going to put pressure on debt markets, where bonds particularly are in big, big trouble, and that potentially produces quite a seismic shift in equity markets, and Bitcoin will not be immune to that. And so the question I'm asking myself, right, from a technical perspective, I think this entire move up has been set on unstable foundations. I think this kind of uptrend is not the kind of explosive gains that you would have seen previously. If you look back at how the market has behaved post-halving, your 2016 halving, you just got this absolute parabolic trend to the upside. And then you had the same again in 2020 after the COVID crash. You hit your halving and then price just went ballistic. We haven't had that this time out, guys. So we haven't had the parabolic move to the upside, and people still believe that's because it's coming, it's around the corner, and we're going to see price stretch into $200,000, $300,000, $400,000, $500,000. I just don't think that's the case. To me, this looks like an unstable foundation for prices going higher, and I believe at some stage this uptrend is going to come to an end. Look how clean this trend line here is. Very few people pointing out the multiple hits that we've had on this, and it's capped price right at the upper boundary of what looks like a sort of megaphone or broadening top pattern. So for me, I do think that given the state of the overall market, if we get any kind of meaningful correction in equities, if eventually the NASDAQ rolls over and corrects 50, 60, 70%, Bitcoin, of course, is going to get absolutely obliterated. And people fail to factor that in when they think about risk for Bitcoin, because they only know a world in which it's going up. And I find that quite bizarre, because if you look back historically, some of these drawdowns, right, you know, 75% back in 2022, in 2018, you had 83%. These crashes are really significant, and both of these crashes occurred. Well, this 2018 crash occurred when risk on assets like equities were pretty stable. The 2021 correction occurred when the NASDAQ corrected 25 to 30%, and we still ended up with Bitcoin 77% down. What happens if Bitcoin starts to roll over and the NASDAQ corrects 50, 60, 70%, which we know can happen, right? Go back, and this doesn't happen very often, but go back 25 years ago and you'll see what happened at the end of the dot-com boom when valuations got out of touch with reality. And I think we're seeing that kind of market now with the AI boom, with all the hype around Nvidia and some of the other stocks. And that doesn't mean that those stocks can't go up more in the short term. I believe that they will. But if and when they start to roll over, things could get really messy for Bitcoin. And I just love the confluence down here of this trend line here and this big area of support, which dates all the way back to the 2017 market and the 2020 COVID crash, the end of the 2018 bear market correction. This is a really significant area for price action. And so it would not surprise me in the slightest if Bitcoin came all the way back here and ended up in 2 years' time in the $3,500 region. And another thing that I will point to, and I'll come on to what I think is the killer chart in a moment for crypto, but another thing that I will point to is that there are still so many skeletons, in the Bitcoin closet. I truly believe that this market has lots of issues that will look obvious in hindsight, but people are sort of willingly blind to now. The risk that comes with major stablecoins, the risk that comes with Bitcoin treasuries and corporations taking on huge amounts of debt to purchase one of the most volatile assets in the world. All of these risks mean that if price starts to go lower, there will be lots and lots of people in trouble, not just retail investors who have levered up and expect Bitcoin inevitably to go to $500,000, but big institutions who have borrowed huge sums of money, and they've borrowed that money on the premise that Bitcoin will only go up. And if we get a big move to the downside, what you'll get is this death spiral where people have to keep selling in order to cover margin, and those sales will come thick and fast, and they will push prices to levels that most people think are unimaginable. So that's how I'm seeing the Bitcoin market at the moment. And I'll just end with this. This is USDC dominance plus USDT dominance. So the two major stablecoins in the space, USD Coin and USD Tether. And what does this tell us about where the crypto markets are heading? One of my favorite patterns is this descending broadening wedge. It has a really high hit rate. We have been in a 2-year accumulation on this chart where we haven't seen new lows for stablecoin dominance, and we've slowly been knocking time and time again against the top of this resistance zone. And I believe that when this downtrend breaks, we're heading back to the top of this accumulation range, and this time it's going to break, and stablecoin dominance is going to head much, much higher. And what does that mean for the overall market? Well, if people are piling into stablecoins, that normally means that people are going risk off and they're getting out of Bitcoin, Ethereum, and altcoins. So to me, this is one of the charts that very few people are talking about. For now, we've been rejected here. This downtrend is possible that we come back to these lows at some stage before heading back up towards the accumulation range high. So yes, again, it could be possible that we see a brief period where alts do reasonably well and Bitcoin maybe makes another new high. But on a high enough time frame, if we look at the monthly, I think it's highly unlikely that we're going to get a monthly close above this trend line. And I would say that any move to the upside is probably going to be capped in the 130s. So maybe 135, late 130s, 140 would be the high for the market. So look, you can do with this information what you want. Again, none of this is financial advice. I'm just telling you how I'm seeing the market at the moment. Bitcoin is undoubtedly producing diminishing returns to investors. Stablecoin dominance looks like it wants to break out. Again, this could take months. It could be another 4, 5, 6 months before we see this move to the upside. But when it does, Bitcoin is going to struggle. And if that happens at the same time as the Nasdaq bubble popping and people getting out of equities, back into the US dollar, back into risk off assets, then boy, oh boy, things could get really, really messy for Bitcoin. Like I say, the fact that very few people believe this is even possible tells me all I need to know about how the market is leveraged right now. Lots of people are long in a big way. It's not just Michael Saylor. It's not just MicroStrategy and some of these Bitcoin treasury companies. I think your everyday Joe is praying that the Bitcoin market continues to produce returns, and everybody believes that the kind of gains that we've seen in the past in 17 and in 2021 are possible again, and I just don't think they are. And I think all of that greed, all of that optimism has to be completely flushed out. And by the time we get down here, I know lots of people say they'll buy whole Bitcoins. Let me tell you something, very few people will want to buy down here. The headlines will be that Bitcoin's dead. There will be so much stuff coming out about exchanges, about stablecoins, companies going bust. The whole thing will look like a total scam. Ironically, for me, that is the point at which Bitcoin really has my interest, and I think life-changing returns are on the table again if we get to this level here at 3,500. So that's how I'm thinking about the market. I hope some of that is useful. This is why I believe Bitcoin could head as low as $3,500 over the next couple of years, and why, despite the fact it may take us some time to roll over, I truly think this is just the beginning in terms of downside for Bitcoin. Hope some of that was useful. Good to spend a bit of time with you guys, and I will catch you again soon.